and gentlemen, I'd like to welcome you back to yet another virtual investor forum. I'm your host, Dan Theok, Senior Vice President of Investment Banking here at Mayberry Investments Limited. Today, I'm joined by my usual panelist, our CEO, Mr. Gary Parrott. Welcome, Gary.
Thanks, Dan. Welcome, everybody. Happy to be here.
Good deal. Today, we have not one, but two guest speakers, none other than Mark Hart, Executive Chairman of CPJ Jamaica Limited. Welcome, Mark.
Thank you, Dan.
And Tom Tyler, Co-Chairman of CPJ. Welcome, Tom.
Afternoon, Dan.
Great to have you guys both here. We brought you guys in to have a discussion like none other, and we're certainly excited to get started. But before we do it, we'd like to encourage viewers to post their questions on social media and remember to tag us with the hashtag MIL Investor Forum. If you enjoy this program, be sure to like, share, and subscribe to our YouTube channel, Mayberry Investments Limited. Okay, what I would like to do is jump right into my analysis of CPJ and their performance for the year. But before I do that, let me tell you a little bit about CPJ. It was founded in April 1994 by Mark Hart and Tom Tyler as an institutional food service distributor selling consumable products to the hospitality industry. CPJ is recognized nationally as a leading food, non-food, wine, and spirits distributor for major international renowned brands. It now manufactures its own line of beverages and meat products. The company is located in Montego Bay, Freeport, St. James, in over 120,000 square feet of warehouse space. It houses offices, manufacturing plants, and a refrigerated dry warehouse space, which is state-of-the-art. CPJ is one of the largest local distributors of wines and spirits and distributes globally recognized brands such as Bacardi, Dewar's, Yellowtail, and Grey Goose, just to name a few. By the way, be sure to enter our Grey Goose social media giveaway courtesy of CPJ. You can find all of the details on our Instagram and Twitter pages. Best of luck to everyone. So, most of our viewers, I'm sure, are well aware that CPJ is also listed on the Jamaica Stock Exchange. On that note, if you're looking to expand your portfolio or embark on your very first investment journey, Mayberry Investments can guide you in achieving your financial goals. Follow us on social media and visit our website at www.mayberryinv.com to learn more. Now, let's introduce our guests for this evening. Mark, as you know, is currently the Executive Chairman of CPJ Limited. He brings to the company his considerable experience in management, having previously served as its Chief Executive Officer from 2004 to 2011. Mark also spent some time in the public sector, where he has served as Chairman of the Airports Authority of Jamaica from 2007 to 2011, and he's currently the Chairman of the Montego Bay Free Zone Limited. He's also served as the Director of NMIA Limited, the Port Authority of Jamaica, and CMU. He also previously served as a Director of the TEF, CITO, and JAMPRO. Some of you may know that Mark is a founding shareholder of CPJ, which is currently listed on the Jamaica Stock Exchange. Now, Tom. Tom is also a founding member of CPJ and has served as company's CEO from 2011 to 2016. As mentioned earlier, he's currently the co-chairman and maintains strong vendor and customer relations that fuel the rapid growth of the company. Without a doubt, Tom has helped establish CPJ as a leading food service company on the island. Tom is the Director of CPJ Investments Limited and the Chairman of CPJ St. Lucia Limited, a subsidiary of CPJ. He also serves as President of the Hospitality Services Unlimited, a company registered in the U.S. that engages in business with CPJ. In 1994, Tom was inspired to create an integrated distribution company that led to CPJ, which he co-founded with Mark. Well, that's the introductions. Again, welcome, Mark.
Thank you, Dan. It's great to be here.
Good to have you. And Tom, always a pleasure to have you, buddy.
Always good, always good.
Good deal. And Mr. Parrott, are you still with us? Welcome again to the program.
I'm here, waiting to get into it. Let's hear what these wonderful gentlemen have to say today.
No doubt it's going to be a great day. Well, first up, folks, let me do my analysis of CPJ before we throw the questions out to these goodly gentlemen who took time out to join us today. So first up, I want to look at the financial results for the 9-month period ended March 2022, and it was a great 9-month period, folks, the best ever in my opinion. So first up, we saw 133% growth in revenues, up to $86.4 million. And again, for the 9-month period, folks, we saw gross profit growing by 179% to $27.6 million. We saw a reasonable containment of cost, and the result was a whopping 512% growth in the operating profit to $10.2 million and a 285% growth in the net profit after tax to $7 million. That translates into an EPS of 6.18 cents in US. That's a 290% increase, folks. When you look at the current stock price at $14.58, using the trailing earnings, that gives us a PE of about 12.83 times in a main market where I like to think of the average at about 15 times. So this stock is undervalued, in my opinion, by at least 20%. And we see the trailing earnings in Jamaican dollars is $1.14. That trailing earnings in Jamaican dollar terms is $1.2 billion. This stock is traded at a high of $25.99 and a low of $3.23 in the last 12 months. Currently at $14.58, and like I said, guys, I think that's like at least 20% below where it should be. Their total market cap's about $16 billion. It's also interesting to note in the last year, we see them increasing total assets by 44% to $78.5 million and increasing shareholders' equity by 57% to $22.4 million US dollars. Great performance, guys. Next slide shows what's been happening in the quarterly performance, and you can see in the last 4 quarters that they've been in the green, increasing the profitability of the business on an ongoing basis. You can also see in the prior 8 quarters before that, a 2-year sort of rough period of COVID, you could see that the business was returning losses with a peak loss of $4 million in 4Q 2020. Well, COVID obviously is behind us as far as CPJ is concerned, and I'm excited to see the results in the last 2 quarters in particular, with them doing $3.6 million to the December quarter and $1.5 million to the March quarter. And we'll definitely be talking to these guys to appreciate what's happening there. I know for a fact that the last quarter, they still had about 6 weeks of hiccups from the pandemic. So I think the very next quarter is going to be even stronger. I'd be surprised if it's less than $2.5 million in my opinion. Next slide shows how the stock has traded. And I mentioned the high and the low for the last 52 weeks. We can see that throughout the pandemic, this stock was consistently trading below $5. And if you didn't buy like me, you missed out on a great opportunity, folks, because that stock price has moved from that low of approximately $2.96 to an average price of about $5 for 2021. The first 9 months, at least, that stock has peaked up to $23. And now it's back down at $14.58, despite having a great quarter result. And that's why I think the stock's undervalued by at least 20%. So I think bigger and better things are definitely expected to come. And I think after you hear the questions we have for those folks, you will more than likely agree. Okay, good deal. So I want to jump right into the questions. And again, folks, remember to feel free to send in your questions and we'll happily answer them. I'm actually going to throw out the first question to our CEO, Mr. Gary Peart, who I think, like me, must be impressed by the results. Again, in the 9-month period, $7 million profit, as far as I can recall, is larger than any profit they made pre-COVID. I got $4.5, $5 million as the peak profit since then. So definitely want to find out what you guys are doing to get the profit up like this. I know it's not a fluke, but I got to ask the question. Gary, over to you. What question do you have for Mark or for Tom?
Well, my first question is really on the money side. You know, we have seen where they have come through the worst. You know, we've seen where there's a lot of business that's being run. You know, what's happening with their cash cycle? Will they need more cash? How will they be able to get those cash? That cash is that are more lines required? What's going on with their cash?
Okay, so Gary, the ironic thing about COVID is that we had more cash for the 18 months that we were in very, very precarious trading terms, conditions. We had more cash than during that period than in our 27-year history of the company. And you know, it's a funny feeling, right? Because you're not doing any business, but we had a runway of almost 12 million US of cash. So we were very successful pulling down our inventory, which traditionally before COVID was running around 25 million. And we pulled that down to the end of COVID to around 10 million. And we had about 15 million of receivables. And we were very active. Tom, you know, was very very involved, and we actually raked in pretty much all the money that we'd had on the road and got it in a very quick, timely manner. So when COVID finally was over, we actually had the cash to get back into business and to re-engage with the customers and, continue to make investments, which we continue to do during COVID. Unfortunately, business has been so good that that's actually having a little bit of a strain on our cash because we're just putting out so much business. We're adding receivables, we're adding inventory. Our suppliers want to be paid very quickly now. They're not eager to give you long credit terms, but we're certainly managing our cash. It's just the business is running so hot right now that it is using a lot of our resources.
Thanks for that, Mark. And speaking about running hot, Tom, tell me, how are you handling supply chain issues?
Well, supply chain is about the trickiest thing that you can do in this time. Obviously, each sector, we deal in a lot of different sectors, be it dry goods, dry foods, refrigerated, frozen, wine, spirits, raw materials, etc. So each one of the areas that we buy has its own intricacies on the lack of supply, shipping challenges, etc. As Mark said, when COVID happened, we did pull in our cash quickly. We paid our vendors within 90 days. We didn't owe anybody money. And on the restart, we're in very good position, what I call pole position at the top of the list, with our supplier manufacturers from around the world, 35 countries. So we were able to get credit and restart with all our vendors. We currently run about 25 million in open POs, which are on credit. And we've been able to stay ahead of the curve in keeping our warehouse full. Now, this is a big job. This is a job that takes somebody on the phone on a daily basis and going the extra mile. So we don't take no for an answer, and we always find a solution to the situation. And that's put us in the position where we are today. Because the person that has the goods in the warehouse has the goods to sell. So a lot of people are having problems getting goods, be it they've lost their credit, they don't have the talent to get the logistics in, they don't know the people to call. So I would say that we're on the top of the list of our supplier partners, and this has been one of our major successes on the rebound in coming out of COVID. So we're in very, very good shape, and our customers depend on us because we have the products that they need to feed the guests that want to come here on vacation. So we're ahead of the curve, and we will continue to stay ahead of that curve and stay the leader within our industry.
Appreciate that. Next one's for you, Mark. I mean, this last quarter, I want to say 2 million for the quarter, roughly speaking, 5 million in the first half. But you did have some challenges in last quarter, so I don't think we've seen the full potential of the business, right?
That's the beauty of what we were able to do during COVID. We had already embarked on a restructuring program because of a previous incident with a failed IT system, and COVID gave us the opportunity. So when we came out of COVID, we brought our costs initially down by $6 million per year.
Amazing.
Right? Of course, over time, we've had to build back in some additional costs, but we're still significantly lower than pre-COVID, right? So we did incredible. In December, we basically broke an old record. We had huge profitability. I don't remember the exact number. I can't count that high. But let's just say it was a really great December. And December is traditionally a great month, right? So we come into January, and all of a sudden they had the new variant, Omicron, coming in. Pilots weren't showing up for work. Planes were being canceled. People are coming with their family, and one family member gets sick. So the whole trip gets canceled. So all of a sudden in January and February, we saw our sales, which was on a trajectory, and all the hotels were reporting extremely strong bookings. We saw that we pulled back by over $1.5 million in sales over the previous pre-COVID period, right?
Right.
So we're down to like low sales numbers for January and February. But despite that, because of our cost structure and because of the way we're managing the business now, we're actually still able to make a decent profit. And then, of course, in March, things ramped back up. We got through that variant. The protocols were lifted somewhat, and we saw a huge surge back to profitability. And we're seeing that now going into April, and we expect May and June, which will be the end of our financial year, to continue to be strong. So long and short of it is, Dan, just having spent the time during COVID, become really efficient, we have had the first time in our history, 28 years almost this year, where we've made money for 12 consecutive months. First time in our history.
Excellent.
Normally, we're seasonal,
Right.
and when the dips come in May or June and end of August and September, we were losing money. Last year, after COVID started back, we made money in September, October, November. We've made money from May 2021 right around to May 2022, and we're set up.
Excellent. I appreciate that. And I think the future is bright. I mean, tell me, Tom, what's the current state of business, and what does the future look like for the business?
Well, right now, with our current sales, hotels are still not full, right? So we haven't really felt the full effect of hotels running 95 or 100%. So some of them are doing very, very well, and some of them aren't doing as well as the others, right?
We're not open.
And we have hotels that are not open, and we've had hotels that have closed from pre-COVID numbers of rooms. So our current sales, once the hotels fully ramp back up, we expect our sales to even grow further.
Wow.
Right? So we're on a trajectory to, do some. We've already passed through April. We have the crystal ball. We know where we are in May.
Right.
So we already know what this quarter is going to look like, and it looks like we're going to get a full quarter without any disruption.
Excellent.
As Mark was saying, going into the end of December, we started to feel a pullback.
Right.
The last week with Omicron and everything that went crazy. I was on my trip to go away for Christmas. I didn't go. A lot of people didn't travel, and that just spilled right over into January and half of February. Then we had a good 6-week run at the end, and everybody knows the numbers of what happened in our
So this last quarter is like going at half throttle.
The last quarter was half throttle.
Amazing.
For sure.
Half throttle for sure. So now we're going into April, May. May is transitional from winter to summer.
Right.
So the hotels aren't full.
Right.
Generally, they're not full now. I actually have people go stay in hotels to tell me what's going on.
Right.
Employees, go check in a hotel, and
I get
it's
it.
a great way to understand what's going on from the ground up. From the ground
Right,
up.
right.
And I can tell you right now, we have a lot of upside in growth going into June, July, and August, which I think is going to be roaring. Also, we'll have the diaspora is coming back for August. The parties will be out. People will be having a great time. And I think that's going to be fantastic. So I'm very excited for June, July, August, September. And our first quarter, we're going to knock it out of the park. But the future is even brighter. When I look at the future of Jamaica, right now, tip of the spear, the Sandals Group, Dunn's River, 250 rooms will be done by the end of the year. Another 250 by the end of 23. 500 new rooms. It's going to be an amazing hotel. We have Rio, broken ground on 800 rooms. They build them quick. That's probably 12 months away. That's in Trelawney, under construction. We have Princess Hotel in the west, 2,000 rooms. They've been working on it for the last 12 months. It's real, it's alive. It's a 2,000 room hotel. I just met with an Italian gentleman that bought another property down in Westmoreland, 850 rooms. Vivo Wyndham, 850 rooms. Let's go to Montego Bay. The Secrets Group with AM Resorts, Freeport, another 281 rooms that they're trying to put out there.
But help me, big picture. So I'm
So-
expecting 5,000 rooms in the next 8 years. What does
No,
that
no,
mean?
I-
What does that mean? Next 5,000 rooms in the next 4 years. What does that mean for your business? Am I going to see, potentially 5% growth, 10% growth?
No. I can calculate it by room.
Yeah, roughly, just roughly.
I can calculate it by room.
Roughly.
And if I told that to you on TV here, a lot of people would be knocking on my door. But our growth is exponential.
Okay.
And Mark and me have been sitting here for 27 years, driving down a little rickety road back in the day, and seen this thing blow up. And we know that if there's 5,000 more rooms coming on in the next 3 to 5, right, it's exponential for us. I mean, Moon Palace is looking, Hard Rock is looking, Planet Hollywood is there. All these properties have been bought. Margaritaville, there's a Margaritaville theme hotel that's out there that's being not talked about.
And these are relationships you have. So
These are relationships that we deal with all the people at the top levels of the hotels.
Yeah.
And usually when hoteliers come here to do a deal, they interact. Actually, I was coming over here today and I was called by a very interesting gentleman. I don't know if I should say his name, Mark. No.
It's gonna be
Yeah. Well, it's that is coming in the middle of June and asking me all kinds of information on building cost, et cetera, et cetera. So Jamaica is a hot market. Obviously, we have Cancun overbuilt, 18 million people going through the airport. Punta Cana, I think it's 9 million going through the airport. Montego Bay, 4.5 million going through the airport and growing. So I see significant growth in our tourist industry through these difficult times. So the future is very bright,
It sounds
and the
so.
sun is shining on us in Jamaica.
I'm excited. So Gary, I'm excited, but I got to control myself. I'm sure you have another question that you may want to ask these guys.
Yeah, definitely. It's impressive when you hear what they've done with the costs. It's impressive what we're hearing in terms of the revenue side. But as COVID subsides, will the discipline subside as well? Do we expect to see a gradual jump in these costs and we go back to the pre-COVID CPJ in terms of rising costs?
We have put in new infrastructure, both in technology and also in our human resources. And we are running at about 20% less manpower than we had pre-COVID. And we expect to be able to continue to support the growth of the business with marginal increases in manpower.
Good deal. And what about growth? So if you need to grow your business by 30, 40, 50% exponentially over the next 2-3 years, is that going to turn around and have any step costs from a CapEx point of view or OPEX point of view? How's your capacity to deal with this growth?
Okay, so CPJ has excellent infrastructure right now to handle probably another 50% growth locally. Okay, we have built our distribution center, which was only commissioned right before COVID. And we've put in all the technology. We have about 8 acres of land. We have more land that's undeveloped beside us. We don't expect to have to build additional infrastructure for the next 3 to 5 years. Now, having said that, we've said that before, right? And we did have to run out, and we were always playing catch up with our infrastructure. But a lot of that also had to do with poor systems and poor, trying to keep up with the level of growth. Right. We actually feel now that we're ahead of running the company very efficiently, and that we have the capacity to continue to grow the company in a managed and fiscally, advantageous manner to keep putting a lot of profits to the bottom line. I know Mayberry is one of our largest investors, and we know you guys like to make profits, right?
Absolutely, and it's appropriate time for me to declare that interest, which I didn't before. So, Tom, tell me, what new exciting projects can we look forward to from CPJ?
Well, there's 2 ways that we can look at when you say projects. Number one, adding to our list of SKUs or items, right? Okay. And again, during COVID, we used that time to analyze what we were selling, how we were selling it, and where we were getting it from. We did find new sources for different products, which have paid off coming back out of COVID. And we started dealing with specific areas like baking. We're now the Caliboo chocolate distributor, and we're bringing a straight container of chocolate from Mexico, from the Caliboo plant there. Largest chocolate producer in the world, right? Baking's big in all these hotels.
Dairy.
Dairy, we were always big in dairy, but in the bake side, we also did bread enhancers. So we've added in that area. We're looking at disposables right now. I think the last time we had this conversation, there was talk about seafood and expanding into our seafood line.
How's that been going?
We're making major inroads and growing in that area. So we're constantly looking for opportunities within our current basket of items. But there was an area that Mark had said I wanted to get into back a couple of years ago. He says, you know, we should be in produce. That's the one piece that we're not involved in Jamaica. And I said to him, well, we can't be in produce because we don't know anything about it. I'll tell you right now that we put together on our new staff, and we have 3 very strong players that know about produce, 2 that are from overseas, 1 that are local, 1 person's local. And we are now investigating that. We've been working with the Ministry of Agriculture to get it right. It will be local product. 80% of what we sell will be local. And I believe that that can put an immediate amount of money on our dollar sales monthly. And I would think by the end of the year, we'll be making that happen. The other area that everybody's heard about is our CPJ markets. Drax Hall will be finished in July. We'd love to do one in the West, so we're hunting for that location. So that's another area that we're growing our business that we didn't have before. In St. Lucia, we built our first full-line grocery store in St. Lucia. That's been a game changer for us down there. St. Lucia is quite profitable now for the size business it is. We also did a depot, and now we have another location that we've identified for our second full-line store. Not big stores, but medium-sized stores. So, again, thinking out of the box and what we didn't do before, but we're doing now. The Jamaican store is a little bit different, more slanted to the hospitality side. St. Lucia is a full-line grocery store.
Thanks for that, Tom. Gary, I'll give you one more final question before we wrap this up.
Thank you, Tom. Thank you, Dan. My question is this: given the success during COVID of their bucket deals, it showed that the retail market has demand for CPJ's products. So, do they now have a strategy to roll out a retail program?
Gary, that's a great question, and of course, COVID, highlighted the need to be a little bit more diversified with the company. We were about 15 to 85% hospitality, 85% obviously pre-COVID. We started the COVID period. We had 15,000 followers on our social media. We ended, we're closer to 35,000 followers now. So we had a rapid growth. And of course, that leads people into the products that we sell. You can really reach a nice audience with that. And we've become very targeted with our retail sales. We're focused into the channels of retail, A stores, down trade. We're not trying to be everything to everybody, but we're seeing where we're growing the portfolio. It's now up from that 15%, trying to get closer to 20%. A little higher than that too. The margins are better because we're focusing on the type of brands, not just, as I said, trying to sell everything to everybody. And we see that over the next 5 years, we'd like to get that business up to about 50 million US. Currently, it's closer to 20 million. So it's still a respectable size business. And then, of course, Tom spoke a little bit earlier about our CPJ market, which is really the chef store, the stores that are the face to all of our products. And what we're also seeing is that we've put in a really great online platform, cpjmarket.com. Let me repeat that, cpjmarket.com, right? You can go there, you can buy everything you want, you can settle your bill, and it'll be delivered to your door, Gary Peart. And I know you appreciate good stuff, right? Now, we've also negotiated a deal with the largest villa booker in the island. They have over 120 villas booked, and we're going to create a link so that we can offer a service to their customers before they get to Jamaica. They can get to our market and shop, and then have product delivered to them, so that when they get to their villa, you know, the Grey Goose is already there. The fine meats and wine and everything is already at the villa. So we see that as another great channel for us to build business. You can kind of call it retail, but it's got the hospitality twist because it's, you know, villa. And then finally, we put in a B2B platform, which we are rolling out to mostly smaller hospitality customers right now, so they can actually get on a B2B platform, see their account, see their order histories, see their, you know, their payable, make decisions online, kind of like having a virtual salesperson instead of having to call in or you know. So we're moving with technology, Gary, and we see that we're well positioned.
Excellent. Thanks for that, Mark. Well, folks, if you're not excited, I don't know what to say to you. And again, I think this stock is undervalued by at least 20%. I've declared our conflict. I really look forward to coming back in 2 or 3 months' time, seeing the full year blow up. Tom, I know we're going to top. I think you're going to top $100 million in sales easily. We're still at pre-pandemic levels in terms of tourist arrivals. The expansion in the tourism sector is coming. You guys are adding new products. I think CPJ is just a great company, and we're really happy to be a part of it as a passive investor, but also to help you guys with financing and help you blow that business up. So, folks, it's not too late to get yourself some CPJ if you can, and we're going to come back in 3 months' time, and I'm sure you're going to hear bigger and greater things from CPJ. So, Tom, thanks for being with us. Mark, thanks for being with us. Really appreciate it. Good deal. So I take this moment to thank our viewers for tuning in and being a part of today's forum. I'd also like to thank our special guests, Mark and Tom, for their insightful contributions to today's discussions. And I'd also like to thank Mr. Peart for his insights. We're certainly looking forward to bringing viewers and investors even more content like this in the near future. Be sure to follow us on social media to stay up to date with all things forum related. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Keep safe, folks, and remember, wise investors, slow and steady wins the race. Goodbye.